everything privacy.
We're live. Zika Jam, everyone. Welcome on another Union Hallcast. I'm here with Daniel and David. Actually, I also realized now, like, you guys both led our two funding rounds as well. So I have both of my lead investors basically here with me. So for this podcast episode, it's not going to be as technical, engineering heavy. I think we're going to talk a bit about like I guess the major trends that we see in crypto now, and I'm hoping to hear from you guys what basically the trends are going to be in a year or two from now, so we can be prepped for that with Union. So maybe to get kicked off, Daniel, could you give us a brief intro on you, the fund, etc.?
For sure. So we're proudly investors in Union. We are Gumi Cryptos. We've been around since 2018. We're early stage investors, typically pre-seed, seed stage, like to basically make high conviction bets in highly technical, but founders that can also run exceptional businesses. We are investing in our second fund, which is a $110 million vehicle. And we straddle Silicon Valley in Asia. Again, very proud investors in the Union. And it's been a pleasure working with Carol and David. So that's us in a nutshell.
I don't have a gun pointed to him, by the way. These compliments are... and then you, David, also even more so Silicon Valley scene, right? So you've always been in SF?
Yeah, I've been out in San Francisco for about 15 years now. Started my professional life doing venture debt and investment banking for tech. Fell in love with crypto in 2018. And I think like many other people, once you see it, it's something that you can't unsee. So decided to go full-time into crypto at that point. Fast forwarding a bit, I ended up starting a fund in 2021. And through that experience, I met you, and I remember our first meeting in the public hotel in the lobby. And, it was very clear how excited you were about Union. And I shared a lot of that excitement around interoperability and where the space was heading. And so I was proud to lead the first round of Union. Now, today, I sit as the CIO of Anagram Ventures. Anagram is kind of a crypto native holding company. We have a handful of business lines. We are builders first. We build and incubate products and either open source them or spin them out into their own standalone entities. And then we also have a funds business. So we're investing out of our second early stage venture fund, typically pre-seed and seed checks. And we also have a liquid fund as well, where we're taking a very long dated view on the market and tokens. We made a bunch of different investments within the privacy space and interoperability space really early. And it's kind of cool to see that inflection point today where all of those things are starting to become more important and more in vogue. And maybe we can talk a little bit about the evolution of that and how we got to where we are today. But stoked to be here.
Yeah, because I remember like DMing with JJ a lot, who's also at Anagram, who also has the really cypherpunk kind of ideals. But back then, when we originally were talking like 3 years ago, privacy wasn't like as big of a meta as it is now. And at least for me, I think like besides like Zcash pumping and people think, okay, like the tokens that have privacy can go up. I think like it's really clear right now with neobanks and such and on-chain stablecoin flows, why it's becoming more necessary as well, right? Like the actual business case, like people are willing to pay for it. I think it's becoming a lot clearer. And right before we jumped in this call, we were kind of chatting on like some of the recent conferences these guys have attended. What did you guys kind of observe, like narrative-wise? What are like startups building right now and raising for? Is it indeed like all privacy aligned?
There is a ton of activity going on in privacy. Obviously, there are many different approaches to privacy. You can think of privacy both as kind of platform level as well as feature level. So at kind of the platform level, you have things like FHE platforms, kind of ZK platforms, MPC, TE, right? There are all these various underlying technologies that can be applied individually or in combination to the issue of privacy, depending on the use case and the trade-offs with the underlying tech. But what we're also seeing is like privacy is becoming a feature of platforms. And when you look at even Union as an example, right, the core infrastructure is not privacy infrastructure, it's not Zcash, but now you can add this privacy layer on top of the core capabilities to make it more useful, higher utility, and support a wider range of use cases. So I think that's a really exciting thing we're seeing. When I think of cypherpunk versus kind of practicality as an investor, I think the cypherpunk meta is actually a bit of a head fake, which is that you have all of this cypherpunk kind of maximalist kind of builders, but at the end of the day, institutions are coming, and institutions don't care about cypherpunk values. They care about privacy for their clients. They care about not getting front run. They care about regulatory compliance. And so I think that's really the most exciting design space for privacy. And obviously you're getting this pump in cypherpunk privacy, but that privacy isn't scalable in my point of view. So I think the narrative is at least pulling builders in to this exciting space. So I'm excited about that.
Yeah, for sure. I think backing up and setting a little context on the history of like privacy within crypto is interesting because, you know, in the early days, 2010, 11 through maybe like 15, you had Bitcoin that launches. It's peer-to-peer electronic cash, and it's pseudonymous, right? So it's not fully private, but people on looking from the outside think like, oh, this is a private thing. It's here to launder money, like whatever. And back then it was pretty private because there weren't a lot of people using it, and there weren't the indexers, and there weren't the block explorers, and there weren't all of these tools to be able to coordinate and observe the activity on the chain. So it felt private, but it wasn't really. And then became some of the first privacy innovations, like mixers and CoinJoin, right? The early Bitcoin mixers to break the links between the transactions. And then maybe a bit further, you had things like Dash and Monero and Zcash, right? That kind of like kicked off like ring signatures and stealth addresses and all of these other different things that we now are seeing as more and more important today. But really, privacy kind of stayed in this niche state for like the last 10 years, from 2015 to 2025. And a lot of that was because these cypherpunk ideals were met with a lot of resistance from regulatory bodies, right? We can see from like the Tornado Cash lawsuits, for instance, how that was like, no, there are OFAC concerns here. We are going to sanction everything because crypto obviously is only used for laundering money and for terrorism and et cetera, et cetera. And I think the big turning point and why privacy today is in vogue is because you had some of these resolutions from the 2022 sanctions of Tornado Cash and OFAC, right? So that chilled the entire space. There were these big legal battles, and in March of this year, the Treasury basically said that we're going to lift these sanctions entirely. Now, unfortunately, some of the developers are still kind of facing these legal battles, and we need to resolve that because that's wrong. But from an investor standpoint, there were only a handful of people who actually invested in privacy technologies between 2015 and 2025 because it was just a no-go at investment committee meetings, right? It was like, we don't want to be seen as regulatory incompliant. And so we're just not going to touch that yet. We know it's important logically, but it's just too hot to touch. And so once we got that resolution of kind of earlier this year of Tornado Cash, and then also a handful of people talking about Zcash on the timeline, Zcash has basically acted as an attention token for privacy, right? Then now we have this explosion of importance.
Yeah, that was one of the reasons why actually initially like we didn't talk with Union about privacy because So Hussein, our co-founder, principal engineer, he had kind of like the first paper for private bridging and kind of like the initial like code, how to kind of accomplish it. I think like done about 4.5 months ago. And my initial message I sent him, and he was like, "Hey, we could do this." It's like, "I'm not sure, man. Like, we might like not be able to get listed. We might like get into legal trouble with this." And I remember the initial message he even sent. He said like, "It's Tornado Cash on steroids." But like, well, as an engineer, I freaking love it. As a CEO, like this frightens me. And so we first have to figure out like how can we make it compliant. Because the cyberpunk in me then always says, well, like to make a privacy protocol compliant, effectively like you're de-anonymizing, right? You kind of have to build in a sort of backdoor. So that part I think is less cool. But I think that's like the only realistic part to get it to scale up, right? Like you can't actually build a protocol that can be used for money laundering. Then obviously the government will come after you and you're going to have to deal with law enforcement. But now that we have like so many stable coins on chain, like it's so obvious, right? Because I think if I were to like start a new startup now and I had to like build a neobank on chain, like what's the real blocker for me to get my mom to move from her Dutch bank to using this bank? That's the fact that all of her money is fully public, right? That everyone can inspect all of her expenses, her salary, etc. Like it's that final blocker, I think, to put like Revolut fully on chain.
Totally. The intersection of privacy and verifiability is a huge unlock, because ZK is a dual purpose technology, right? You have privacy, maybe three purpose: privacy, scalability, verifiability. And the intersection of those things allows you to build confidentiality that is potentially regulatory compliant and allows you to have a sense of what's going on, to be able to make sure that certain actions are not occurring. So it's a big unlock. I think it makes a huge difference. And the timing of this has to do with the maturation of that technology, right? It took a while for ZKPs to hit prime time in terms of performance and scalability. And now that we're there, I think there are tons of use cases to be unlocked.
Yeah, that's really funny when you look at the way we implemented private bridging, because indeed, like you say, it's the intersection of verifiability and privacy here. And because specifically for those listening, wondering why, when you do private transfers, you still need to verify that the transfer is valid on chain. But suddenly you're like working without being able to provide any data, right? Like regular ERC20 transfer, sure, like the smart contract has someone's balance. When they submit a new transfer, you check, do they have enough balance to actually fulfill this, right? Easy check. Any junior programmer can basically write a token and get it out there. But the moment you want to do this privately, now you have to figure out like, how do I implement the is valid function for transfer if I don't have access to the original balance, if I don't really have access to who's sending it, right? And if I don't have access to who's actually receiving it, if I can't find the trail. But in our case, exactly, like we use like the fact that we use like state roots, that we don't actually like on-chain operate on the actual data, but that we like off-chain compute a ZKP, and on-chain just verify that ZKP against like the storage root of a blockchain. So we're just able to extend that protocol effectively. Specifically for this, like everyone knows, like I'm a ZK maximalist. FAG, I, by the way, find extremely cool as well. But I think ZK specifically here has a big advantage, because with the FAG stuff, what you kind of get, I think, is that you have to build like an L2, right? Like that's effectively what Zama is doing, right? It's like it's an L2 separate VM, which you can access from other chains, but you kind of still like need to bridge into it. You have to do the same with Aztec. What I really like about the ZK approach is the fact that you kind of can deploy it on existing L1s. So you don't need to like exit the like Ethereum DeFi ecosystem or alter the Ethereum L1 itself.
Yeah, I mean, in terms of timelines, the intersection of those two technologies is extremely promising. In the short term, I think there's a ton of performance bottlenecks that need to be unlocked when it comes to FHE, bootstrapping, and all other sorts of stuff that makes it hard to do these computations at scale. It's kind of the holy grail of privacy. And so in the end state, I think it's going to be a huge unlock. And you're going to get to a point where you can have a verifiable FHE. That's really exciting. But today, we're not there. And so I think ZK, if you think about the maturity of the tech stack, it's way more performant. And so it's quite logical to start there. But ultimately, all of these underlying technologies, I think, are highly synergistic with each other, and will prove to be useful used in combination.
So if we kind of think about scalability here, so I guess like the benchmark that we always talk about in crypto is, can we put Nasdaq on chain, right? And then if you actually start looking at like how many transactions the Nasdaq processes, it's actually like a ridiculous amount, right? With also like, I don't know what the numbers are, but some ridiculous like settlement time to like 2 milliseconds, or right, like from an engineering perspective, I'm amazed by it, and I would love to actually like fully know how they accomplish this. And then I guess the closest we can get to that on chain is Solana, right? But I think if we were to like draw like a bar chart, Solana would be like 3% on the way there or something from accomplishing it, right? And Ethereum is like 0.1% on the way there. If we want to put like all finance on FAG, like how long, Daniel, do you think like something like that will take? Where do you think we're at? Is it like a multi-decade like timeline before we get that close?
There's a ton of uncertainty. I think, as you see with these frontier technologies, there is a very large margin of error, because one order of magnitude breakthrough can shift the timeline years into the future. So same thing we're observing with quantum right now in the discourse. So there are known problems that people are working on to advance this technology, and there are ways around it. You have various underlying schemes. So FHE is not one thing. You have TFHE, you have CKKS, you have many others, and they have different trade-offs in terms of their applications. Now, you could build infrastructure that's agnostic to the underlying scheme, but still you need to accelerate the schemes themselves, as well as apply more sophisticated hardware to those problems. And so the timeline depends on the use case. For things that are extremely maybe you have a spectrum of how important privacy is. Is it critical, or is it nice to have? And so when you have something like a point in time transfer, you need privacy for a minute, right? Do you really need fully homomorphic encryption for that use case? Well, if you're dealing with military secrets and intelligence, maybe it's a way more critical use case where you're willing to take the performance hit as a result of that use case. So it's highly use case dependent. I think when you're thinking about a world where FHE is running on every computer and all of your AI compute is private, that's years away. And so we're not at the point where we can get there, but I think that is the end state of where this all goes.
Yeah, I tried to kind of like figure out for myself, like for my payments, my neobank model, like which transactions would I want to be private. And funny enough, what I arrived to for myself is actually that like the moment my transactions are above about $100 in value, I don't need them to actually be that private, because those expenses will be maybe my groceries, a new MacBook that I bought, something like that, which I don't mind if people know that. But then I thought there's actually like a massive opportunity for transactions in the like $5 to $15 range, because that's like, and I don't have an OnlyFans subscription, but OnlyFans, of course, like has a tremendous amount of paying users, right? And they're actually like not a micro payment, but it's like a relatively small payment that obviously do huge amounts of volumes. So I actually think there's also like a massive use case to be able to support small payments, because I think for a lot of users out there, it's actually the smaller payments that they probably don't want. I know their girlfriends or their mother to know about, right? Like your subscriptions to Hustler or something like that. So I think that's like an interesting thing here, where even though we might be able to initially like do big use cases, like David, you mentioned like doing like big on-chain settlement, like a Wintermute moving 200 million or something, right? Like that's a valuable transfer. But post that, there's actually a lot of other valuable transfers to tap into when we actually have that scalability.
Yeah, for sure. I think like thinking about like why privacy even matters in the first place is important when like thinking about like which use cases are also important. So I think Daniel hit on this earlier, but like this is not like a cypherpunk or ideological thing. It's a very practical and pragmatic like direction we are building in for privacy, right? Like privacy isn't really about hiding crimes. It's more about personal security. and freedom, right? Like public chains leak this metadata that reveals either your income or your payments to your buddies or your spending habits or political donations or whatever it might be. And I think, we've seen so much recently, a few in Argentina, one very high profile one out here in San Francisco recently, of these very targeted attacks on crypto people because they know that they're wealthy and they know that they have their keys at home, and that's bad, right? So like we need to make sure that people are protected. It's not about hiding from the government. It's about hiding from bad actors, actually. And so when I don't know who, if you guys use Venmo or not, but there was, the first year or two when I was using Venmo, I thought it was the best social network app out there, right? Because it was really cool to see that Carol was paying Daniel for this late night pizza thing. And they were out till 4 a.m., whatever. And I was like, I started to think about that. I was like, why do I want a bunch of people knowing what I'm paying people for? And so like, I switched that to private like pretty quickly, and like I think the same thing is happening. And I think privacy should actually be the default. It can be opt in, but I think it should actually just be opt out. If you want to broadcast your stuff, fine, but we're going to shift it to be the default to opt out of it. And in terms of like use cases, I think like there's the everyday crypto user, right, who's just maybe sending, receiving, or making some trades, buying a meme coin, whatever. But as we start to bring trillions of more stable coins on chain, there's more activity. We want to bring NASDAQ. There are just a ton of use cases that can benefit from this, from DeFi and trading to cross-border remittances to like institutional flows, as we were talking about, Carol, for market makers or funds that are trying to, hide their strategies so they get better price execution, on ramps and off ramps. I mean, the list goes on. And so I think now we're kind of waking up to the importance of this, and that it doesn't have to be super cypherpunk. It can be selective, right? It can be confidential, and it can be selective disclosure of like what we choose to share with people. That's kind of the beauty of some of these schemes, specifically ZK, that allow for this activity to happen.
Yeah, David, to your point on the Venmo analogy, it's really interesting. It also breaks down, right? Because in Venmo, your balance was never public. Maybe your transactions were, but no one knew how much money you had in your balance and what assets they were in. And Ethereum is a disaster, right? You have an ENS that has a human readable name, and your entire account balance is on chain. It's a open invitation for a wrench attack. And the fact that these are increasing in frequency is a huge issue. And so like balances should not be known to the public. This is a major issue that needs to be solved.
Yeah, and I guess it's like, if you think about it that way, it really prevents crypto from addressing basically new businesses to operate on it, right? Because our example right now is, okay, a crypto millionaire. And I think most of our listeners like don't necessarily feel too bad for a crypto millionaire, right? Your first instinct is, oh, but you're rich. Why don't you like get security, right? It's a separate case. But we start thinking about, okay, I want to like run a web shop myself, right? And I don't want to pay 4% in fees, so I'm going to accept stables. Now all of a sudden, like someone can see that my web shop took off and I made 300K in stables last week. And we've already seen with like people being actually like attacked, that happens for even lower amounts than that, right? We've seen people like who travel on holiday who got kidnapped for like 50K or something, which is an inconceivable amount. I think for many listeners, like they may have been airdropped that amount even, right?
Yeah, but it's also important, again, that you can have that privacy, but also share some of that too. Because if you're running that same web shop, what if you want to get a loan to grow your business, right? You have to be able to share with whoever that lender is on the other side that you are actually receiving these amounts in payments, so that you can get a loan to grow the business. So it kind of cuts both ways. You want to have this privacy built in, but also be able to selectively disclose that and those transactions and those flows to whoever might need it on the other end.
Yeah, 100% true. Regarding like use cases, kind of like discussed, I guess like use cases which are a bit hypothetical, like what when Nasdaq is on chain, what when there's like $1 trillion in stables on chain. Actually, like how many stables are there actually right now? Like a couple hundred billion, right? So actually, the hypothetical like trillion is like right around
Very
the corner.
close. Yeah.
Yeah. But for right now, like for privacy protocols, like what are you guys most excited about? Like I can think of a couple things where right now in existing products I would want it integrated. My younger brother runs a prediction market, like a strategy himself. And you have to think like when you run something on Polymarket and successful, people will just see and copy you. So actually, right now, like for him, there's a certain advantage over choosing Kalshi, because at least right there you can sort of like hide it a bit better, and so it actually prevents like money from going on chain right now, like this very moment. What are some other like use cases you guys are like excited about that you would like want to see in a product right now where you think, okay, if it had this, I could go from putting $100 in this to my whole capital, or I have a new business case here?
Yeah, I mean, to me, the most obvious one is dark pools. Dark pools are a huge design space that have been very valuable in traditional markets, and not just for the privacy, but for very high quality execution. So we've invested in this segment. I think it's a very exciting segment. It's kind of one of the killer use cases because when you have this dark pool, I mean, you kind of have similar things happening on Solana with kind of private AMMs, but it's not exactly the same. But if you can have an on-chain dark pool where that's highly liquid, where institutional market participants can get high-quality private execution, they're not getting front-run, and there's additional assurances beyond traditional dark pools where you kind of don't know what's happening inside the black box. But if you have verifiable compute happening within that pool, then you can be assured that you're not getting front running, and it can be actually proven. So that's extremely exciting from my point of view.
Yeah. Man, there are just so many different things, from consumer use cases to business use cases. I think a team that you are in touch with, Carol, is and one that we led around in is Fairblock. They're building a lot of stuff, and we're very early to this, having been building for the last 3 years, around things like MEV protection from like a DeFi angle to confidential stable coins for transfers and balances for yield, to fair rates, which are like leaderless sealed bid auctions that clear one fixed rate for lending markets. And so like I think like there are just a million different, really privacy needs to be embedded in all of things. And I know, this is a strategic imperative for Ethereum, for Solana. On the Solana side, there is a cool team called Umbra that is working on some privacy things right now.
That's like a built-in Archium, right? With
That's
Yannick.
right.
Yeah.
Yep, exactly. So I think we're seeing that the suite of technologies, like multi-pet, whether it's ZK or whether it's MPC or whether it's FHE, there are that suite of technologies can be very widely applicable to like a million different things, and it's really just finding kind of like what those breakout use cases are going to be. I mean, I don't know if you're following some of the stablecoin related L1s like Tempo or ARC, but I know that they are very serious about embedding privacy in their chains, or also using kind of like outside modular infrastructure to be able to provide better products, right, to all of their users and their business partners. And so it's a really kind of like wide ranging thing.
Makes sense. So for me, like I think it's like a use case explosion, right? And we see like a lot of like new startups right now, either taking like many of these use cases or just one, which to me, like just from a like very vague like narrative perspective. Almost seems like AI, but we have a few companies that like build like a foundational model, right, that can like basically serve everything, and then a whole bunch of companies attacking like one vertical specifically, maybe using like one of these foundational models, maybe like training one themselves, but just choosing not to make a general purpose but focusing on a vertical. Do you guys think that in this privacy sector we're going to see like one of the bigger players solve like 50 verticals, or are you as like investors more bullish on like these players specifically attacking like one vertical and having like one product that like improves one aspect of crypto?
Yeah, I tend to fit on the vertical specific, use case specific. If there's a spectrum, the reason is that most of the time privacy is not the value prop; it's a feature. And so, unless privacy is the core value prop of the thing you're building, like a dark pool, that's one very important one where they kind of align, where it's a core part of the value proposition. But for a stablecoin chain, as David was talking about, privacy is an add-on feature, and so you're not going to win market share because you're a private stablecoin chain. It's just going to increase the general stickiness of the platform. So I think it's a mistake that a lot of builders make, where they take something and they add privacy to it and they say we're better. That's not how the world works, right? You need to already be the best at your core value prop, and then you bolt on this as a feature. So I think that's, for the vast majority of builders, the way things will progress.
Yeah, I think I generally agree with that. Today, privacy has really just been seen as a feature to like enhance different products, and I think like along with maybe the meta today in crypto of chains should be product led in the first place. That you should probably start with one killer vertical specific use case. Say you're building a privacy chain, right? Having all of this cryptography isn't necessarily going to help you with distribution, right? You're not going to get 1 million people using your chain just because it's private necessarily, right? It's probably because you have an insanely good product that is better than the stuff that is not private on Ethereum or something else. So I would start with an interesting company, again, who's pretty early to the privacy space, is Pay Network, right? Who has started with a very simple use case of private Venmo, right? And on top of that, once you get users, you can build out the lending markets, and then you can build out the trading markets, and then it starts to look like Wealthfront on chain, right? And so if I was a privacy first chain, I would really focus on what is your killer product? What is the thing that is going to bring people to you? And otherwise, you're just kind of like a service provider and building solutions for other entities who eventually will probably end up building their own solutions anyways.
Yeah. So like if you think about like the more like chains that have it, maybe not as a product yet. So I know Zama is like focused on stablecoins, but we have to like see that come alive, of course. And there's other examples like Aztec, where like they have a general purpose. It's an L2, right? But it does have like nodes. I feel like it falls a little bit in between, although like the trust assumptions are that of an L1. But they don't have like a killer product yet for the chain, right? So that's going to be a really interesting basically TGE to observe if like indeed the privacy is enough to attract builders to get those products, or if they kind of like miss the goalpost here by not having a killer product initially.
Yeah, I mean, the key thing is that if you could utilize that infrastructure as a co-processor, you could still build the core application logic within highly liquid composable environment like Ethereum base or Solana.
Yep.
And so if that's possible, why would you build the core liquidity, the core application logic on the private chain? So I think that's a big issue these ecosystems are going to face in all likelihood.
Yeah, that was my first talk with Aztec. Like, if it's an L2 that inherits Ethereum's security, right, then what's technically preventing me from just forking the code and like running it myself and not have value go into that at all, right? With an L1 at least, like you need to like bootstrap the network, right? There's a certain like economic security attached to it. But technically, if you have a ZK L2, then you can just fork, run a single sequencer yourself, and have the service. because now it's still like a bit prohibitively expensive for an app to do so. Like it'd be pretty like big infrastructure investment, but assuming that like we get some technical improvements on this as well, right? And running this infra is easier, then might even see like an app just boot up a Hetzner server and decide, well, we're not gonna like pay fees to this co-processor. We'll just run a co-processor ourselves.
Yeah, for sure. I don't want to get ahead of ourselves, but I think that I'd be interested to learn more about Union and Union's product set around privacy and where that goes.
Yeah, so we announced like the private bridging white paper, of course. And we did the first private bridge transfer between Base and Ethereum. So actually very proud that now like the first private bridge is technically live. It's not live in the UI. The way we're approaching this too is like seeing, well, I think it's a bit early for private bridging to actually be that valuable. I actually think there's like still much more value for privacy within a chain itself. But our realization was that even though like technically the product is like private bridging, you can also do like private transfers within a chain, but you don't know if they are bridge transfers or regular transfers. And so what that means is, let's say in our example, if there's only one private transfer happening on Base a day, but 10,000 on Ethereum, then it looks as if there's also like 10,001 happening on Base, like you don't know. So the anonymity set basically expands to a total size of the chains. And so that gives it a really good advantage over taking, let's say, Railgun and just deploying it on many chains, because then you have to like build out liquidity on each one individually. And so our approach with here is, okay, what's like the best product we can get out initially with this? So we're starting to roll this out now with kind of contractor payout solutions. So you have to think of like products like Request Finance, Franklin, etc. For me, that's a very natural one because I have worked in crypto since, have been getting paid in crypto since 2017. So I'm very used to this idea that I give my wallet address to an employer and they send stables to it. But from like now running Union, it's kind of strange because technically like anyone could go on chain and see like how much we're paying like individual team members, how much those team members have. If you browse around, you might notice that the wealthiest team members are actually not the senior members in Union. We have one employee who did well with meme tokens. So, but you can technically track that down, and that's of course something I don't want because we talked about range attacks, right? I actually don't want like when someone works for Union that someone could create that connection and know what they're up to on the side. And I think that basically all companies that operate like this in crypto will want this initially. And from there, because technically like contractor payouts is like very close to on-ramp, off-ramp in kind of what you're building. Like it's the same product, just a different way that you present this in the UI. So the next one that we're doing after that is confidential on-ramp into products. And there you have to think confidential exchange deposits, for example. With our product, technically, it's like not necessary that people can see what the individual like inflows into Binance are or into Coinbase. What's kind of cool is we use that verifiability and ZK component to allow an exchange still to generate a proof of reserves or what we call a proof of money flow, where they can say, well, the last hour we had 5 million in inflow or 4 million in outflow, right? They can still provide those aggregated statistics. But from the outside, you can see if this was one whale depositing 200 million, or if it was, right, 200 million users, each depositing $1. And I think that's kind of the sweet spot where we want to be in crypto. Because now, like, sure, I love like reading on Twitter as well that someone is moving a massive amount of money and then gambling myself, should I short Bitcoin now? Because maybe this is a sailor who's like sending a big amount of money. But it does prevent, right, like actual trading strategies from occurring. If you know the moment we start sending the money before we've actually executed the trade, Whale Watch will already be like screen capping this and sharing this, and the whole market is going to panic. Like it prevents crypto from actually being used for settlement. So that use case is actually the one like I'm most excited about. I think this one will work especially well with perp exchanges too, because there I think you see like a lot of users who are, I know both like a split screens polar market and hyperliquid, and they watch the bet on will Trump do XYZ, and then seeing if someone deposits money into hyperliquid to short or long, right? And so actually being able to make it confidential just allows more traders to come on chain and actually successfully trade without their strategy being fully copied, or if you make a profit taking that out without anyone knowing. And I think for us, that's also going to be basically a big revenue driver here, because at least from speaking with potential clients here, this is like a really good use case that they want, right? And it aligns a little bit with your dark pools as well, Daniel, because you can immediately imagine, well, if I could privately deposit into Hyperliquid, could I potentially deposit through a dark pool, right? Because I probably already know the order I want to put on Hyperliquid ahead of time. Then you can route through the dark pool, have it settled there. If not, it goes to Hyperliquid. But this whole path is still fully confidential. And so from the outside, people don't know what's happening. On Hyperliquid, it's maybe a bit less interesting, because Hyperliquid still remains like a public L1. But doing this, for example, on Lighter becomes extremely interesting, right? When basically you can keep technically the entire exchange confidential and just generate a ZKP that all the trades are fully valid. Then you can have a true confidential system. So for me, that gave me the adrenaline rush when we basically sat down and we did the first private bridge transfer, and then we told each other, well, actually, it's a much cooler product that we have our hands on here, that we can try to do one vertical first, which is contractor payouts, and kind of a simpler approach where I think we'll find immediate product market fit, and then basically just do the same product, different vertical, to see if we can find success there too.
Yeah, that's really cool. I know you guys launched your kind of ENS, your cross-chain ENS U names, right?
No, that's not launched yet. It's being incubated.
Okay.
So
what I was asking is the intersection between that and privacy is really interesting. So how are you thinking about that?
Exactly. So we're immediately saying, okay, can we indeed, for example, use those proof of money flows and attach those to names themselves? All this stuff, how we're thinking of integrating this. So Cor and I are actually speaking for, so in the Netherlands, we don't have a Congress, we call it the second chamber, but we're doing a presentation for 10 Congress members on the 18th of December. To once again try to warn, EU is losing on stable coins, wake the fuck up. The Tether is making this much money and we're all losing out here because you can't do this in the EU. But also because the EU tends to design a system that basically is a 1984 Kafka-esque system of full control where no one owns money. We actually think you can do private stable transfers, be fully AML compliant, because with those ZKPs that we do to verify is a transfer valid, you can totally include a proof of innocence or a proof of KYC. So you can actually build a system that is fully compliant with MiCA, that does what every single country needs to do, is fully on-chain, fully compliant, and still fully private and confidential, where people own their own money. So that's kind of the end state where I want to go with this. You can totally imagine that being combined with cross-chain name service, right? Because that's kind of the data aggregation point for this happening, where then it almost becomes your bank account that you associate these proofs with. So it's kind of our vision for how we want to combine all these things.
Yeah, I think that's super powerful. And you mentioned something that I think really important earlier, which was increasing the anonymity set, right? So, and maybe this has this kind of dovetails into a product discussion too, but the more people that are in the private system, the more private the system becomes. And I know that seems really obvious, but it is a really important point, because you can triangulate different things when some of the components of the system, whether that's the price on Polymarket or the auction on Hyperliquid or whatever it might be. You can triangulate those things to where the system starts to break down and privacy starts to break down. But the more and more people and the more products and the more flows that are within this kind of shielded pool or privacy set is really important. And that's why Union is in such a great position, because it is a blockchain of blockchains. You can call it a bridge, non-derogatory, but it is the natural place for this privacy product to live, right? Because it's going everywhere. If you start on something that is fully transparent, like Ethereum, you've already lost. And so bringing this kind of like on-ramp product to a bridge who can confidentially or privately go anywhere is super important, not to mention the things that you can build directly on the Union chain, starting with identity, starting with on-ramp, and then getting into private stablecoin flows, lending, borrowing, trading, et cetera, et cetera.
Yeah. Yes, that was the big unlock for us, actually. Like, just that it sounds like the anonymity set is a sum of like all chains. That's where I realized, okay, this is actually like very different from another privacy protocol. Another thing I kind of like, I want to shield my own product, right? Like everything I love about it. I think one thing that people also not yet fully grasp is with our privacy solution, you still use the same addresses that are like native to the L1s that we connect to. And that's quite powerful as well, once again, because like if you're a good analytics company, you'll be able to like differentiate like regular ERC20 transfers from our private transfers. But if you start looking at bubble maps and such, you won't be able to do that. So there's kind of like an additional barrier. Like Aeon Ethers can, like even if there's only a single person who can transfer, no one else, like you can't make the connection between the two transfers. But if you're like a range security or something like that, it's like you will be able to make the connection, right? You have like databases, you ClickHouse and stuff. You're going to do a bunch of analytics, sure. But then once you start using Arkham and such, I think it's actually extremely difficult as well with our protocol to figure out what the money flows are. I think you need like something even more advanced to start scratching. And then once your anonymity set is large enough, even those protocols won't help you figure out, like no one can figure it out. For us, that's really good for bootstrapping the anonymity set too. As you can imagine, like if you have money, you could always like try to bootstrap it by effectively like wash trading your privacy protocol, right? Just run a bot that does private transfers like every minute, and that way basically you provide anonymity to your real users because you're boosting the set. But doing so on Ethereum is like really expensive. You would need to budget as a company like, oh fuck, we're going to spend 10k in gas a week to basically boost the anonymity set initially. But with our products, we can basically pick like the cheapest chain that we connect to. So we can just say, okay, actually on Base at the moment is the cheapest place where we can start bootstrapping the anonymity sets.
But isn't the anonymity set proportional to value rather than transactions? Because when you put in 10,000 ETH and withdraw 9,999 ETH, it's easier to associate.
Our protocol doesn't necessarily work with a pool that has like a single TVL. It's based on the Worm protocol, and so what it effectively creates is debt accounts that on-chain still hold funds in them, and those debt accounts only keep growing over time. But any debt account might actually be a live account, and someone is just waiting for a week before they use it, or wait a month, etc. So what you can do is you can kind of take 10k and just start generating debt accounts to basically create an anonymity set that's like millions and millions in debt account size. And could be there's only one live account among them because only one like actual real transfer happened. Could be that like 1 million of them are real, right? And might like activate at any moment. So that's like another advantage over like the pure like shielded pool approach. It's actually not based on the TVL of the protocol itself.
And isn't that the same feature, which is kind of linear with time, that it gets increasingly private or not?
Technically amount of transactions, but so yeah, linear with time. Yeah. So if you set the bot and you do 1 per minute, you see a linear growth in the anonymity set happening. So that's like really powerful in this model too, because effectively you can just start building the anonymity set with a low amount of capital. We don't need like 100 million to get this bootstrapped. Guys, I know like your time is ultra valuable, and we are at the end of the podcast session. So we're like 3 minutes over, so I don't want to steal too much. For those listening, like the founders, builders, hearing this, what would you recommend them to do right now? Like if they say, okay, I'm going to jump behind my computer and build something right now, and I want to like present that to VCs. What's like, do you think the thing they should attack right now?
You should DM me immediately. Yeah, I think like there is a lot of I think there's like a lot of UI considerations to think about when it comes to privacy too, because we need to design systems that also feel right, and you're not having to do some complicated toggle or et cetera to be able to actually like use something that's private. And I think, yeah, just frankly, just like hit us up, and we're happy to jam on product anytime. This is a really important product to be tackling. I mean, my best advice is to think about who you're building for, right? If you're building for consumers, then something like a pay network is like super beautiful and easy to use, and you kind of understand what that user wants. Now, if you're building private flows for a payroll provider or a market maker, go talk to the customer. Ask them what's really important. It may not be which tech suite you're using. It's probably more likely you need to talk to their compliance department. You need to understand how they're going to do selective disclosure, so you can sell your product into their organization. So you make it a really easy conversation for them to adopt this technology. And then, like, thirdly is kind of what you were saying earlier, Karel, is like we need to start talking to having a conversation with regulators a little bit more. Like, this doesn't have to be like a zero-sum game. Let's meet them where they are and try to protect consumers, protect businesses, but also build a system that is kind of resilient. In the same time, it is able to meet these requirements of these kind of like regulatory bodies.
Makes sense.
Yeah. What I would add is that one design space I'm really passionate about and I think is extremely important is the intersection of privacy and artificial intelligence. I think a lot of these underlying technologies that have been used for crypto need to be applied to this use case, because when you think about transparent memory access to these LLMs, the amount of personal data that's getting leaked to these models is even more important than with the tech companies, because they have the individual context. They have, you could form a theory of mind of the individual much more precisely. And so it's a setup for a dystopian future. So we need to find a way to avoid that. And I think crypto privacy primitives built on top of crypto are going to play a huge role there. So major design space, obviously huge tailwinds, but massive problems that we're creating at the moment. So I think we can apply these technologies to solve that.
Awesome. Hi guys, thank you so much for coming on and elucidating a bit. That's at least what I thought is that we should be building is something that you see as well, being built right now or gaining market traction. For those listening in, we'll be back next week. I think with something a bit more engineering heavy, but I found an extremely interesting conversation. Thank you so much, Daniel and David.
Thanks for having us.
Thanks. Nice seeing you guys.
Cheers,
Bye.
guys.